Hi there, I'm Mark Sebastian, founder of OptionPit.com with the AM Volatility Report reminder. This is for educational purposes only. None of this should be considered investment advice. Consult your financial professional. Options have risk. All right, guys, let's talk about the market. And, well, we opened up down pretty nicely. We're currently down about 13. Futures were down a little less than this overnight, so we sold a little bit more into the open. The Dow for certain is the softest. If you look, Dow and NASDAQ are softer than the S&P and the Russell. The Dow because it's bank-centric, the NASDAQ because some of the big names are under some pressure. But the big things driving things, some trouble in European banks, most notably Deutsche Bank. Look at that, down 5.75%. Never a fun thing for a bank. As the stock sells off, their ability to capitalize that $14 billion fine becomes less, wants. That the U.S. government wants becomes less and less a possible thing. Goldman, J.P. Morgan, the banks down pretty decently this morning. Goldman 1.3, J.P. Morgan down nicely. So some softness in the banks if I pull up kind of across the board. If I look at XLF, if you look at the individual ETFs, XLF is down 1%. The pharmaceuticals are down, and everything else kind of just down a touch. So that's kind of should tell you what's driving things today. It's primarily financials. And that is where the softness is coming from. Even the transpos aren't down that much in relative terms. Hey, I want to talk SIBO and BATS. This is something that will affect you guys eventually. CBOE bought BATS Global. BATS Global is a competing equity exchange. To me, this is a long-term good thing for the marketplace because it reduces fragmentation. Fragmentation has been one of the real problems of relative to liquidity, and I think that we are likely to see more consolidation in the business. SIBO is obviously bigger than BATS Global, but don't be surprised if you see more consolidation. I think it kind of needs to happen, so keep an eye out for that. Well, when we've seen trouble in European banks, so just now that we've said that, getting back to the markets, what we've seen is kind of softness while Europe is open, and then we've seen a little bit of a rally after the banks closed. Would not be shocked if we saw something similar, where we have the S&P down through the Euro close and then maybe potentially rallying back. I don't think 14.25 is completely out of whack. The VIX curve had been completely out of sorts in that where October was trading relative to cash was insanely high. Now it's just really high. The October future is about 1635. The VIX is 14.25. That's still 2.1 points. That is a huge spread given what we're used to. All right. This index has, only about 3 weeks. The future only has about 3 weeks before it expires. And so 23 days to be exact. That spread should be more like a point and a half, not 2.1. I have it about 30% rich, and that we do think there's some opportunity to play there. For sure, some opportunity to play some sort of mean reversion play one way or the other. November is a little less crazy at what is now 330. There's a lot. November seems to make a lot more sense to us in terms of a trade. Some trades that will look interesting. The October 14.5, 15, or 15 puts all seem like there might be some value there. All right, folks. Again, based on how the market is moving and where things are soft, don't be surprised if we do catch a bid off of the euro close, but I think things are going to be rough for the next hour. Okay, folks. Have a good morning. You got questions, you can email me marketoptions.com or call me 888-TRADE-01. Have a good one.